Good day, everybody. Chris Herline here of REAP Financial, coming to you with today's Wealth Report. Today is Friday, March 28th, 2025, and I don't have to tell you, but it's something we're all dealing with. When it comes to your insurance premiums on your home, your vacation home, your cars, premiums are skyrocketing. And I've even got neighbors and people that I know that their carriers are not even renewing insurance. And so when it comes to one of the most critical things to protect your wealth, there are ways that you can be savvy, there are ways that you can be proactive and potentially saving hundreds of dollars on your insurance premium. So today I just want to talk through what we're seeing. It's a topic that's hard hitting. It hits our wallets and it isn't getting the headlines it deserves. These premiums on homeowners policies and car policies are out of control. And the media buzzes about, eggs and gas prices. But when it comes to insurance costs, they've quietly ballooned up about 20% per year recently over the last, 4 or 5 years. So let me break it down here and talk about what you can do to potentially save some dollars. It's best to start with why we're seeing this. What's the deal with this surge? And it's no mystery because repairs for homes and cars are pricier than ever. And the insurers are swamped with claims from the wildfires that we've seen, the floods and the storms, especially in high-cost areas. Even if you're not in a disaster zone, you're still footing part of that bill. Insurers spread their losses across all policyholders, and many are jacking up rates or pulling out of these risky regions altogether. Reinsurance companies, these are the things, think of them like insurers for insurers, they're charging more too. And guess who pays for that? We do. But here's the good news. You've got options to cut those premiums without leaving yourself exposed. Start by evaluating your coverage. Decide which risk you can handle yourself and which risk you need to offload. I'll give you an example. If you're well off, if you got plenty of money in the bank, skipping collision or comprehensive coverage on your car might make sense. The cost of a totaled vehicle would sting, but if it's just a sliver of your net worth, you may be able to save big on premiums. I'd advise you consult with your financial advisor and your insurance advisor before making that decision. Another bold move. Some of our clients with second homes in flood-prone areas skip the flood insurance. It's pricey, coverage is capped, and they figure that they can absorb the hit or rebuild from savings. Risky, yes, but it's their call. On the flip side, don't skimp on liability coverage. We talk about this with all of our clients. You probably get tired of me asking you every year when I'm reviewing you, but an umbrella policy with a high limit is usually smarter and cheaper than boosting liability on your auto or home policy. So the question is, do you have an umbrella policy? When's the last time it was reviewed? As your wealth continues to grow, oftentimes you'll want to increase that as well. Let me talk about a simpler fix. Raise your deductibles. That's the amount you pay out of pocket before insurance kicks in. Higher deductibles mean lower premiums, sometimes a lot lower, because insurers avoid small claims and their paperwork. Just don't set it so high that you would sweat a big loss. And here's another small tip. Skip filing small claims anyways. Insurers often hike rates after claims, even if they're not your fault. So consider paying out of pocket if you can for smaller losses. With homeowners insurance, you want to avoid overinsuring and, more importantly, underinsuring. Set your coverage limit to the cost of rebuilding, not your home's market value. Construction costs are soaring faster than home prices. So depending where your house is at, you want to check local building rates. Your agent can do that for you. And review your personal property coverage. Do you really need 66% of your home's value insured for stuff? If not, you can trim it. The same goes for riders on jewelry and gadgets. Either keep those current or ditch them. Finally, there's no harm in shopping around. Bundling home and auto with one insurer can score discounts, but don't just chase the lowest price. Check claims histories and customer reviews. Some insurers lowball premiums, then deny claims or hike rates later. So I can't promise it's going to be any easier next time you get your annual premium statement and you got to cut the check. But it boils down to this. Figure out what you can't afford to lose. Insure for that and cover the rest yourself. If you stay in front of these things, you could keep more cash in your pocket. At REAP Financial, we have vetted insurance professionals that we would be more than happy to align you with if this is something you want to review. And obviously, you can do it on your own online. It's so easy these days to just get online quotes, but As always, we have resources for you and professionals ready to go. As always, we appreciate your confidence. I'll be back with more in coming weeks. Until then, all the best to you and your family.